Okay. Yeah. Good evening, students. So we are back with FM sessions, and today we are gonna start with chapter called dividend decisions. So all are very much aware that in financial management, financial manager has to take three decisions. One is investment decision, one is financing decision, and last but not the least, dividend decision. So the next two sessions will be completely on dividend decision. ठीक है? A very simple chapter, very easy to understand. Here in this chapter, you have majority of the formulas. So if you are through with the formulas, this chapter is very easy for you. ठीक है? So ध्यान से समझना. Let's start. First of all, tell me, what do you mean by dividend? बताओ. You have studied this in accounts. What does the term dividend means? Dividend is nothing but distribution of surplus. Yes or no? Whatever the company earns and the distribution of that earnings is called as dividend. Money to be paid, yes, money to be paid back to the shareholders in the form of return, in the form of profit, in the form of earnings. ठीक है? Now, इस chapter में, what is the objective? Why this chapter? What this chapter will teach you all? So the objective of this chapter is very simple. Again, it is about decision making. Yes or no? So under this chapter, financial manager or CFO has to decide whether the company should distribute dividend or not. This is the first question. So under this chapter, financial manager को क्या decision लेना है? Whether the company should distribute dividend or not. And if yes, then what should be the optimum payout ratio? अगर distribute करना है, then what is the optimum payout ratio of dividend? What is the optimal dividend policy that company should follow? Whether it should pay 0% dividend, whether company should pay 15%, 30%, 60%, 70%, 80%, 90%, 100%. What is the optimum dividend payout ratio? This decision making financial manager has to do. Are you following? Are you understanding the basics of this chapter? First, whether the company should distribute dividend or not. And if yes, what is the optimum payout ratio? So tell me, if I ask you, what should be the optimum payout ratio? Whether it should be 0%, 15%, 30%, 60%, 100%. आपका आंसर क्या होगा? Tell me. What should be the optimum dividend payout ratio of the company? Or what should be the optimal dividend policy that company should follow? Tell me. Make random guesses. बताओ आपको क्या लग रहा है? बोलो. Tell me, any random guesses. Whether the company shall pay 10%, 20%, 25%, 90%, 95%, 100%. कितना देना चाहिए dividend?
20%.
So it depends. कितना? Someone had just said 10, 20. Some Neeraj is saying 10%. Someone just said 20%. On what basis you are deciding this percentage? Tell me. On what basis you are deciding this percentage? So your answer should be very simple, sir. Optimum payout ratio should be that ratio which maximizes the wealth of the shareholder. Company or financial manager has to select दैट पे आउट रेशियो जिससे शेयर होल्डर्स की वेल्थ बढ़े, समझ रहे हो? एंड वेल्थ विल मैक्सिमाइज व्हेन मार्केट प्राइस ऑफ द शेयर इंक्रीजेस। कंपनी का जब मार्केट प्राइस बढ़ेगा ना, when the market price of the company's share increases, the wealth of the shareholder increases. Are you getting this? So optimum dividend payout ratio should be that ratio that maximizes the earning of the shareholders in the form of higher market price. Are you getting this? Now my question to you. Now listen very carefully. Now my question to you. So funda is simple. Company should follow that payout ratio or that dividend policy that maximizes the wealth of the shareholder. A financial management ka ultimate objective is this only, to create, to maximize the wealth of shareholders. So in every chapter, in the back of your conscious mind, you have to remember this, that the ultimate objective of this financial management is just to maximize the wealth of the shareholder. Means उनको ध्यान में रखते हुए सारे डिसीजन लेने. Are you getting this? So now my question to you, let's say there is one company X Limited and another company Y Limited. Okay, X Limited is that company which regularly pays dividend to its shareholders. Means every year, साल में 2-3 बार interim dividend, फिर final dividend of the after the year end, X Limited gives it to the shareholder. But Y Limited, once in a blue moon, means once in 10 years, once in 7 years, once in 5 years, it pays dividend. So it is not paying dividend regularly. Okay? So there are two companies. One company is paying regular dividend in साल में 2-3 बार, and there is another company like Colgate. Colgate does not pay dividend regularly. It pays once in a blue moon, means 10-12 साल में एक बार. So tell me, as an investor, in which company you will invest? X Limited में कि Y Limited में? बताओ. I'm asking you this question. As an investor, in which company you will invest? Company X, sir, it depends on company earnings. Milan Ali is saying, sir, it depends on company earnings. Priyanshi is saying company X. Almaz is saying company X. Neeraj is saying company X. Why company X? Reason? Because it is paying regular dividend, right? So can I say, just like you, more and more investors will start buying the shares of X Limited, means more and more investors will start investing in X Limited? Yes or no? Why? Because it is regularly paying dividend. So can I say payment of dividend will affect the market price of the company? Because more and more investors are now buying, are now investing in X Limited. Can I say market price will increase? So can I say dividend payment of the company or dividend payout ratio of the company does affect the market price? Yes or no? Yeah, are you following? So can I say in this case, as per all of your opinion, except one, एक जन ने बोला था, sir, it depends on Milan. Milan early said that it depends on company's earnings. That is also correct. So can I say all of you are of the opinion that dividend does affect market price? Yes or no? आपने बोला सर हम X Limited में इन्वेस्ट करेंगे. Why? Because it is giving dividend. So can I say dividend decision of the company is affecting the market price? Yes or no? So just like you all had the opinion that dividend decisions of the company or the dividend payout ratio of the company affects market price, likewise, there are some finance scholars or finance authors who had the same opinion that dividend decision of any company or the dividend payout ratio of company does affect the market price. And there is one finance author who is of the belief that company का dividend payout ratio कुछ भी होने दो, whatever may be the dividend decision of the company, it will not affect the market price. Are you following? So, in this chapter, we have to study the theories given by these finance authors. So, the theories, the base of the theory is very simple. Whether dividend decision of the company affects market price. So just like you all had the opinion that yes, sir, it will definitely affect the market price. Likewise, few finance authors had the same opinion that the company's dividend decision or the company's payout ratio will affect its market price. So who are those authors? One is James Walter. Second one is Myron Gordon. These two finance authors are of the belief that company's dividend payout ratio will have impact on its market price. It means, in other words, it means if payout ratio is 15%, then market price would be something else. If payout ratio is increased to 60%, then it will have an impact on its market price as well. This is what they are trying to say. The core crux, the core content of these two theory is very simple, that dividend decision, any changes in dividend decision will have impact on the market price. Are you getting this? And one author, one finance scholar is of the opinion that whatever be the dividend decision of the company, market price will not change. It will have no impact on the market price. And who is that author? He is MM, Modi Gilani Miller. You have studied MM approach in capital structure decision as well, I guess. Yes or no? In capital structure theories. So here as well, MM is of the same opinion that any changes in dividend decision of the company or any changes in the payout ratio will not have any impact on market price. Are you following? Capital structure theory में क्या था? Any changes in capital structure decision will not impact on the cost of capital. यही था. So here also he is of the same opinion. He is always on the negative side. Are you following? So in this chapter, we have to study these three theories. We have to study the theories of James Walter. We have to study the theory of Gordon, which you have already studied in in cost of capital. But still, we will study more in detail in this chapter. And then we have MM approach. Are you following? So these are the theories or the dividend decision models that we have to study in this chapter. Apart from this, we have another dividend decision model given by Graham and Dodd. We will also study the concept of dividend discount model. We will study the model given by Lintners. Lintner is the name of finance author. So he has also given his theory. He has also given his study on dividends. And then last but not the least, residual approach. So did you follow हमें इस चैप्टर में पढ़ना क्या है? How the flow of the chapter will work? पूरे चैप्टर में इतना ही है. Whether dividend decision of the company affects market price, yes or not. So some authors say yes, just like you all said, and one author says no. तो ये yes or no के बीच की लड़ाई हमें देखनी है. Apart from that, there are few other models that we are going to study in this chapter. Follow any doubt? Any query still here? Yes, correct. Milan's point of view is correct. Any doubt, students, in the
Sir,
basics of
I
this
have a
chapter?
doubt.
हाँ बोलिए.
Sir, you are telling that the market price will increase means you are telling in the context of that means when more people will buy the shares, the market prices will be increasing in the market. That you are meaning?
Yes, 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 correct. In that
Okay,
sense. Because let's say one company is paying just 10% of dividend, and there is another company with the same earning who is giving 50% dividend. So can I say more investors will buy the shares of that company which is paying more dividend? So my point is to explain that dividend decision of the company does affect the market price. Understood? So can we start with our first model, which is also commonly called as Walter's model? Okay? Which is also commonly called as Walter's model. So now all these authors, James Walter, Myron Gordon, MM, has given their own set of formula to calculate the current market price, which is denoted by P0. Which is denoted by P0. I hope you are familiar with this term. P0 means price of the share today at 0 point, at 0 year. So all these authors, except Lintner, has given formula to calculate what could be the expected market price of the share today. Are you following? So unki formulas is based on their theories, their understanding, their assumptions. Are you following? So we have to learn the formulas of all these authors in this chapter. See, I can directly give you the formula as well, and you have to just substitute the value from the questions. But उसमें मजा नहीं आएगा. You will not enjoy in that case. We will try to understand the logic behind the creation of that formula. How the formula would have derived, we will understand that. ठीक है? To the best extent possible. But in this entire chapter, you have to just learn and understand all the formulas which is given by the different authors. And the formula is for calculating the current market price. What could be the company's expected current market price? Understood? So let's start with Walter's model. Walter's model. Now this chapter runs parallelly with cost of capital. This chapter runs very parallelly with cost of capital. So I hope your cost of capital chapter is done and you are very much aware with COC ka formulas, especially for calculating KE. ये आपको याद है? Cost of capital में there was a concept called cost of equity, and to calculate cost of equity there are 6 different methods. Are you able to recollect that? Yes or no? Tell me. Tell me. नहीं बोलो यार. कोई नहीं, नहीं याद है तो आपको याद आ जाएगा. One, see, there were 6 different methods to calculate KE. One such method was earnings model, constant earnings model. And what was the formula? What was the formula to calculate K using earnings model? Can I say it was nothing but EPS, earnings upon market price? Yes or no? ये था. Are you able to recollect this formula? Please reply.
Yes, sir.
Okay, so one of the formulas to calculate KE was earnings upon market price. So in other words, can I say market price, which is nothing but P0, is nothing but E upon KE. ठीक है, अब ध्यान से I have entered into the Walters model. I am trying to derive the formula now. I have entered into the derivation part. Tell me, if I write something like this, E plus D minus D upon K, will my answer change? Will my answer change? Obviously not. It will not change. Because plus D minus D gets cancelled. ठीक है, यहां तक समझा? अच्छा, D plus E minus D upon K. Again, will my answer change? No. प्लस डी को ये साइड लेके आया, माइनस डी को उधर ही रखा. Will my answer change? Again, it will not change. Correct? यहाँ तक any doubts, any queries? No. Can I say this D is nothing but dividend? अच्छा, D upon K plus E minus D upon K. Will my answer change? Again, it will not change. I have just split it. I have just done the split of the numerator part. Again, it will not change. Now, friends, now see very carefully. Huh? What did Walter do over here? This D is nothing but dividend. Huh? D denotes dividend. And earnings minus dividend. Can I say this is nothing but reserves and surplus or retained earnings? If I remove dividend from earnings, if I subtract dividend from my earnings, means earnings में से dividend distribute कर दिया, can I say whatever left is my retained earnings? Correct? So this denotes, this is my dividend. And E minus D denotes RE, means retained earnings. Now what Walter did, Walter multiplied ROI upon KE to E minus D. ठीक है, ये उसकी फॉर्मूला बन गई. दिस इज द फॉर्मूला ऑफ वॉल्टर. D upon KE plus E minus D, the whole multiply by ROI upon KE, the whole divide by KE. This is the formula given by Walter. I know एक क्वेश्चन आपके माइंड में कब से आ रहा है अब कि सर उसने ये ROI डिवाइड बाय KE के साथ मल्टीप्लाई क्यों किया? Yes or no? This is the question that you all are having in your minds. Ki why did he multiply this?
Yes, sir.
With ROI into KE, with ROI upon KE, right? The reason is very simple. Now, first of all, let's understand what do you mean by ROI and what do you mean by KE. ठीक है, ध्यान से समझना. The formula of Walter is done. This is the formula to calculate market price as per Walter. बट एक क्वेश्चन कब से आ रहा है कि why did he multiply ROI upon KE with E minus D? ये मल्टीप्लाई क्यों किया? So let's understand the concept of ROI and KE and how it is related to retained earnings. Let's understand that. So it is very clear. This again, you have studied in the chapter of cost of capital. Let's say company needs funds for investing in new project, for investing in new business. So can I say it will raise funds from equity shareholders, from different equity shareholders? Yes or no? So they will give capital to the company. Investors will give capital to the company. Company will invest, अपने पास तो नहीं रखेगी ऐसे ही खींचे में. So it will invest in some projects, in some business, in some products. And from that investments, can I say company will earn something? Company will generate returns, will generate some returns. That is called as ROI, return on investment. Earnings that are generated by the company from investing in different projects, from investing in different products, from investing in different businesses is called as ROI. And this is the one part of the story. But can I say company has to satisfy their financial needs as well? Because they have given capital to the company. So free में तो just to give as a donation नहीं देंगे कोई भी. They are not doing charity over here. They also want to earn something. So can I say they will expect something in return of providing this capital? Yes or no? Investor has provided the capital to the company. And can I say in return, they will expect something from the company? So whatever the investor expect from the company is income to the investors but cost to the company. Yes or no? So that is key. Are you following? Investors has given capital to the company. They will expect something in return by providing this capital. So this expectation is income to them, but for company, can I say it is cost? So that is key. See, there is one standard assumption of this chapter that unless otherwise specified, entire capital will be raised from equity. Unless otherwise specified. This is a standard assumption that is applicable to all the industry as well. Ki unless otherwise specified, it is presumed that entire capital is all equity capital. Okay? So did you understand what do you mean by KE? KE is the expectation of investor. Okay? ROI is actual return generated by the company. ठीक है? Are you following? Any doubt still here? बोलो, any doubt still here? Because ये नहीं समझेगा तो आगे का ये पार्ट नहीं समझेगा आपको फॉर्मूला का. So any query still here? K is the expectation of investor. Let's say they provided capital to my company and I asked you, what is your expectation? I called all the investors and I asked, what is your expectation? They told me our expectation is 12%. They told me our expectation is 12%. Just visualize the story. Yeah? I called all the investors. I pitched them for capital. Key investor, please provide me funds. I want to invest in my business. So they provide me. They were ready to provide me funds. Then I asked them, what is your expectation by providing this capital? They told me 12%. I asked, now I further asked, why 12% only? ये 12% आपने decide कैसे किया? How did you decide this 12%? So they told me, they gave me a reply. कि 12%, मान लो अगर ये capital, if this capital is not provided to your company, then we would have invested somewhere else. And we would have earned 12% from somewhere else. So that's why we are asking 12% from you as well. अगर ये पैसा हम आपके कंपनी को नहीं देते तो हम कहीं और इन्वेस्ट करते. We would have invested this fund somewhere else and we would have generated or earned return of 12%. So that 12% we are asking from you. Are you following? So how this expectation of investor is derived, did you understand? Got it? So I agreed, okay, 12%. And I invested in the project. I earned a return of 15%. I earned a return of 15%. So can I say, in other words, now just visualize, can I say, if these investors, now very carefully, if this retained earnings, this is nothing but retained earnings, E minus D, if this retained earnings was distributed as in the form of dividend to the investors. Again, if this E minus D, which is nothing but retained earnings, if this reserves was distributed to the investors in the form of dividend, then they would have earned 12% from somewhere else. Yes or no? Are you getting this? Understand very carefully. If I had distributed the retained earnings to the investors, उनको दे दिया होता in the form of dividends, तो उनके पास dividend आता. This dividend they would have invested somewhere else and would have earned 12%. Yes or no? Are you following? Are you following? This is very crucial. Okay. So if dividend was distributed, or sorry, if reserves was distributed as dividend, their earning capacity is 12% from somewhere else. But if the same reserves is kept with the company, I have the capacity to earn 15%. Are you getting this? So this cross multiplication is nothing but E minus D ROI divided by K. It interprets or it shows the efficiency of the company to multiply the reserves. Are you following? So this E minus D multiplied by ROI divided by KE denotes the efficiency of the company. Are you getting this? Denotes the efficiency of the company, means company के पास ज्यादा कैपेसिटी है ये रिजर्व्स को 1 का 10 करने में, 1 का 5 करने में, 1 का 3 करने में. Are you following? Is
Yes,
this
sir,
clear?
understood.
So my company has more capacity to multiply this reserves and surplus. मतलब मैं मेरे पास रखता हूं ये reserves and surplus. I can generate 15% and you can generate just 12%. So I have more earning capacity than you. So it is better to keep with company. Are you following?
Yes, sir.
Other students, did you get this? So E minus D multiply by ROI divided by KE denotes or shows the earning capacity, that how efficient company can work with its reserves and surplus. Followed? 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 So tell me, in this case, if ROI is greater than KE, what should company do? Company should retain with itself or company should distribute the dividend? Bolo. Company should retain with itself and generate more ROI on that reserves, or company should distribute the dividend? What is your rational mind saying?
Retain.
Retain. Everyone, sir, retain, retain, retain. Perfect, perfect. And in other words, now situation is reversed. ROI is 10%, means company की earning capacity 10% है, and investor can earn 15% from out somewhere else if I distribute the dividend. Bolo, what should the company do? Company should distribute dividend or company should retain? Tell me. Distribute, sir, distribute dividend, distribute. Distribute, everyone distribute. Correct. So this is the conclusion of Walter's theory. This is the ultimate conclusion of Walter's theory, that if ROI is greater than KE, then it is in the best interest of the shareholders to retain everything with the company, because company has more earning capacity. 1 का 10 करने में, 1 का 5 करने में, 1 का 20 करने में कंपनी के पास कैपेसिटी ज्यादा है देन इन्वेस्टर्स. So it is in the best interest of the investors, it is in the best interest of the shareholders to retain everything. And if ROI is less than KE, then it is in the best interest of the investors to distribute everything to them, because they can earn 15% if I distribute. And वही चीज मैं कंपनी में रखता हूं तो I can just earn 10% on that. Are you following? So Walter's model is also called as all or nothing approach. All or nothing model. This is the terminology that we give to Walter's model. All or nothing. Either you distribute everything to the shareholders or you distribute nothing to the shareholders. उसमें ही बेस्ट इंटरेस्ट छुपा हुआ है. All everything will be distributed under which situation? When ROI is less than KE. And nothing will be distributed under which situation? When ROI is greater than KE. Understood everyone? Any doubts in Walter model? So Walter model का base is from your cost of capital chapter का concept. The base is very simple. Base यहाँ से था. And from that, I tried to derive the formula given by Walter. But the crucial part is this. This shows this entire thing. ये जो ऊपर वाला part है ना, this entire thing shows the earning efficiency of the company with its reserves and surplus. कि वो reserves and surplus को better efficiently कैसे काम पे लगा सकता है. This part shows. Followed. So the world, see, from academics, from exam point of view, if you are able to just remember this formula, your job is done. You have to just substitute the values in the formula. But I tried in my best capacity to explain the logic behind it. Baki from academics, from marks point of view, you have to just substitute the value. If you remember the formula and if you are able to substitute the values correctly, you will get full marks. Okay? So Walter's model, formula for current market price is nothing but D upon KE plus E minus D multiply by ROI upon KE, the whole upon KE. Okay? Since this is a theory, this is a dividend decision ki theory. Theory is always backed by certain assumptions. So even Walter's model is supported by certain assumptions. Assumption number 1, unless otherwise specified, entire capital is all equity finance capital. Okay? This is standard assumption across the industry and practically as well. Unless it is specified otherwise, it is presumed that entire capital is raised from equity. Entire capital is owner's fund. Second, KE remains constant. Okay? Third, ROI remains constant. Fourth, आपको जितने भी वेरिएबल दिख रहे हैं ना, that remains constant. Very simple assumption. Dividend remains constant, KE remains constant, ROI remains constant. Entire finance or entire capital is raised through equity, and life of the company is still perpetuity. The perpetual succession ka concept, the going concern concept, that life is assumed to be till perpetual succession. Okay? So these are the standard, the general assumptions that Walter has given. Okay? So now,
Sir, I have a doubt. So you told that E minus D multiplied by ROI upon K. It's show that it is a efficiency. But when we divide by whole by K, what does it show in the
sorry,
formula?
what?
You said that when E minus D multiplied by ROI upon K, it so that it is efficiency. But when it's
Efficiency with
whole
the
divide,
retained earnings. How company is able to play with its retained earnings.
so when you whole divided by K, what it's represent?
It general, the whole divide by K. See, I explained you from the base itself ना यार. यहाँ से तो मैंने start किया था.
Oh yes, so yeah, I understand that point. But uh, when the actual formula comes, what's it's represent in the actual formula? I understand what you are telling conceptual thing. I understand it, but when it comes to the formula, what it represents when whole divided by K?
No, it does not represent anything. It is just a simple earnings divided by KE. So if you have, again, let me explain you. How is KE calculated? Let's say you have invested in a share at rupees 120. Okay? So your investment is 120. You have earned earnings. The company has earned earnings of rupees, let's say 15. Correct? So how much is the return to you? You have invested 120 and you have earned rupees 15. So how much in percentage is your return? Bolo. Tell me, कितना आएगा? Can I say it is nothing but 15 upon 120? Yes or no? This is your income. Income from investor's perspective. And the same thing from company's perspective, it is cost.
Yes,
So
sir,
it denotes
understood.
the cost.
Yes, sir, understood. Thank you.
ठीक है? So this was all about Walter's model. And to remember Walter's model, you just remember that Walter's model is all or nothing approach. Either you distribute entirely or you don't distribute dividend. You don't, means your dividend payout ratio should be 0%. Either you give 100% or you give 0%. In between, nothing. Okay? So 100% कब देंगे? When ROI is less than K. Means company की earning capacity is less than investors की earning capacity. And 0% कब देंगे? When ROI is greater than K. Means company की earning capacity is more than investors earning capacity. Okay? So let's take some practical example. Let's solve some practical problems on Walter's model so that it gets clear to you all. You get better clarity, and then we will move forward. So basically, there are three theories. MM approach. MM approach is also called as irrelevance theory because as per MM, any dividend payout ratio will not have any impact on market price. So dividend is totally irrelevant for market price. This is what MM said. Whereas Walter and Gordon are of the opinion that dividend decision is relevant for market price. Come to page number. See, can you see the formula of Walter? D plus R. R is nothing but ROI. Yeah? Divided by KE. E minus D, the whole upon KE. See, R is nothing but ROI, return on investment or internal rate of return. This is the conclusion given by Walter. If R is greater than KE, means ROI is greater than KE, optimum payout ratio of dividend is 0%. Means don't distribute any dividend to the shareholders. Keep it with company because company has more earning capacity. If ROI is greater than less than KE, pay 100% dividend because investor has more earning capacity from somewhere else than from your company. Okay? And when R is equal to K, you are free to choose anything. Either you distribute or don't. It will not have any impact. Okay? You are free to choose anything. XYZ Limited, illustration 2. Illustration 2, page 24. XYZ Limited earns rupees 10 per share. So this is earning per share. E है capitalization rate and ROI on invest and ROI are 10% and 12% respectively. E is 10. ROI is how much? Capitalization rate means KE, huh? Capitalization rate means KE. KE is 10% and ROI is 12%. What is the question asking? Determine the optimum payout ratio and the price of the share at that payout ratio. Tell me, in this case, ROI is greater than KE. Tell me, according to you, what should be the optimum payout ratio of the company as per Walter's model? Bolo, क्या होना चाहिए?
Give nothing.
Huh?
Give nothing.
Give nothing. Okay, so dividend should be 0%. Yes or no? Optimum payout ratio of dividend should be 0%. So can I say in rupees also it will be 0? Okay. So let's calculate market price when dividend payout ratio is 0. So first of all, you have to write the formula D upon KE plus E minus D ROI upon KE, the whole upon KE. D is 0, KE is 0.1, so this itself will be 0, plus E is 10, D is 0, ROI is 12, 0.12 divided by 0.10, the whole divided by 0.10. So how much is the market price? Expected market price as per Walter? Tell me. 10 into 0.2, 0.12. Divided by zero point 0.1, whole divided by 0.120. Rupees 120. ठीक है? Correct. $120. Now see this till here the solution gets completed, but still institute wants to explain you in better terms. So they have taken more optimum payout ratio. So they are trying to check the optimality by using 25%, 50%, 75% and 100%. Okay? So when ROI is greater than KE, हमने फिक्स कर दिया कि पे आउट रेशियो should be 0%. So market price comes to 120. Now institute is saying that check when payout ratio, calculate the market price when payout ratio is 25%, when it is 50, 75, 100. When second it is 50, third 75, fourth 100. ठीक है? ये चार सिनेरियो में चेक करो how much is your market price coming. So let's check. Number one, when payout ratio, P0 is nothing but payout ratio, short terminology, is 25%. So can I say my D will be 10 का 25%? Sir, 10 क्या है? 10 is earnings. A payout ratio is always calculated on earnings, on EPS. So 10 into 25. So can I say in scenario 1, my dividend would be 2.5. So let's calculate the market price when dividend is 2.5. So 2.5 divided by KE, which is 0.10, plus earnings is 10. D is 2.5. Multiply by ROI divided by KE, the whole divided by KE. 1115 rupees. So can you see still 0% पे ही highest है. The maximum market price is coming when dividend is 0%. So can I say wealth 0% पे बढ़ेगी because wealth of the shareholder is directly linked with market price. Higher the market price of the company, higher will be the wealth. Scenario 2. When payout ratio is at 50%. So can I say now D will be 10 ka 50%, which is 5. So the new market price would be 5 upon 0.1 plus 10 minus 5.12 upon 0.1 the whole upon 0.1. कितना आ रहा है? 110. So can you see the market price is now falling when dividend payout is increasing? Obviously, why it will fall? Because company is distributing dividend even though it shouldn't, because company के पास ज्यादा earning capacity है, then also it is distributing dividend to the investors. So wealth कमी होगी. Scenario C, when payout ratio is 75%. So when I say D is nothing but 7.5 rupees. So P0 is equal to 7.5 divided by 0.10 plus 10 minus 7.5 multiply by 0.12 divided by 0.10 the whole divided by 0.10. कितना आ रहा है? 105. 105, yes, correct. And last but not the least, when payout ratio is 100%, means entire earnings is distributed in the form of dividends. So P0 is equal to 10 divided by 0.1 plus 10 minus 10. So this itself will become 0 now. So either you write this or you don't write this, it will not have any effect. So can I say P0 is 100? So these are my payout ratios. Let's prepare a summary table. And this is my market price. Payout ratio 0, 25, 50, 75, 100. When payout ratio was 0%, my market price was 120. When payout ratio increased to 25%, my market price fell to 110. 110 ही था ना? नहीं, 115 था. It was 115, sorry. When further it increased to 50%, my market price fell by another rupees 5. So can you see the maximum market price or the optimum payout ratio in this case should be 0%, because the market price is maximum. If market price is maximum, wealth of the shareholder will be maximum. Any doubts? Any doubts?
No, sir.
Now the same illustration. Let's reverse the situation. Same illustration. Huh? Let's reverse the situation. Earning is 10. ROI is now 10%. And KE is now 12%. So first of all, tell me, इसमें optimum payout ratio क्या होगा? What shall be the optimum payout ratio as per Walter? When the situation is reversed now. So can I say the optimum payout ratio should be distribute everything, means dividend should be 100%. Correct? So let's check कि 100% dividend payout ratio में हमारी market price सबसे ज्यादा आ रही है कि नहीं. ठीक है? ठीक है? So I am giving you different payout ratios. 25, sorry, 0 से start करेंगे. Scenario 1. When payout is 0%. So can I say in this case my dividend will be 0? So P0 is equal to 0 upon 0.12 is 0 plus E minus 0 multiply by 0.10 डिवाइड बाय 0.12 द होल डिवाइड बाय 0.12 कितना आ रहा है 69.44 आई एम बिलीविंग इन योर कैलकुलेशन मैं सॉल्व नहीं कर रहा हूँ एवरीवन इज गेटिंग दिस 69.44 let me solve 69.44
Yes, sir.
yes yes scenario B when payout ratio is 25%. So when I say D will be rupees 2.5. 2.5 divided by 0.12 plus 10 minus 2.5. 0.12 divided by 0.10 the whole divided by 0.12. कितना आ रहा है 72.91. Now reverse trend will start. Higher the payout ratio, higher would be the market price because wealth will be maximum when you distribute more and more to the shareholders because now the situation is reversed. C when payout ratio is 50%. So D will be rupees 5. So P0 is equal to 5 divided by 0.12 plus 10 minus 5 0.1 divided by 0.12 the whole divided by 0.12. $76.38. ओ सॉरी ये उल्टा लिखा मैंने ROI is now 10%. So 76.38. So scenario 3 इसमें कितना आ रहा है when payout ratio is 50%. Please calculate. Even I will calculate. 5 divided. अच्छा scenario 3 is 76.38. So scenario 2 was correct 72.91. Okay. So this is 72.91. Scenario 3 76.38. D when payout ratio is 75%. So D will be now rupees 7.5. So my current market price is 7.5 divided by 0.12 plus 10 minus 7.5 whole multiply by 0.1 divided by 0.12 whole divided by 0.12. So it comes to rupees 79.86. And last but not the least, when payout ratio is 100%, this is your optimum payout ratio. So P0 is equal to 10 divided by 0.12 plus 10 minus 10 will be 0. So this entire thing will be 0. 83.33. Correct? So again, let's prepare a summary table. Column 1 is for payout ratios. Column 2 is for market price per share, denoted by P0. 0%, 25, 50, 75, 100. At 0%, my market price was 69.44. At 25%, it increased to 72.91. Then it further increased to 76.38, 79.86, and last but not the least, 83.33. Can I say this is the best of all? So did you follow? Either you pay 100% or you pay 0%. वॉल्टर का यही मॉडल है, ऑल और नथिंग अप्रोच. द बेस्ट पे आउट रेशियो इज आइदर 0% और 100%. बीच में नथिंग इज ऑप्टिमम. Followed with this, we complete the Walters model. बोलो, समझा?
Yes, sir.
Any doubts in Walter? Can we move to our next model? Yes, correct. This is what Walter has concluded, that either 0 or 100, बीच में कोई नहीं. Next, let's understand the concept of dividend discounting model. And उसमें ही Gordon's model will be covered. Dividend discounting model. So we have completed this part. Now, I will explain you this concept, dividend discount model. And उसमें ही अंदर Gordon's का model आ जाएगा. Because Gordon's model का base is totally on dividend discount model. ठीक है? Have you heard of this name, dividend discount model?
No, sir.
No. Okay. First of all, this model again is to value the expected price of the share. It is based on the concept of valuation of shares. See, at CA final level, you have a separate chapter on valuation of shares. And under that chapter, you have n number of models, n number of ways and methods to value, to calculate the intrinsic value of the share. N number. And I would say you can create your own model as well. You have to just justify. You can create your own model as well. If you are able to convince the opposite party and if you are able to justify your model, that would be the valuation model as well. So valuation or financial management is very, very practical. There are no standard set of rules or standard set of theories or standard set of theorems. It is very practical. So this dividend discount model is based on the concept of valuation. As I told you, valuation is a big concept. There are n number of ways, n number of models, n number of methods to calculate the value of share. And one such model is dividend discount model. हमें उसी से मतलब है at CA inter level. ठीक है? So one such way of valuing the share, of calculating the price of share, कि कितना शेयर का एक्सपेक्टेड प्राइस होना चाहिए, दैट इज डिविडेंड डिस्काउंट मॉडल. ठीक है? इट इज बेस्ड ऑन द कॉन्सेप्ट ऑफ वैल्यूएशन of shares. And as I told you, valuation is a big ocean. There are numerous models, numerous methods to value the price of the share. And one such model is dividend discount model, because at CA inter level, we are just concerned with this way method. In fact, I am again telling you, if you are very much interested in finance part in future, then you can derive your own. You can create your own valuation model as well. You have to just convince the opposite party, or you have to just justify your model. Baki, that will also be accepted. But for now, from academics perspective, let's stick to dividend discount model. And as I told you, it is based on the valuation of shares. So as per dividend discount model, the expected price of the share today is based on the present value of all future cash flows. सर ये तो सुना सुना लग रहा है, ये तो देखा देखा लग रहा है. See, the name itself suggests dividend discount model. So क्या होगा? गैस वर्क करो, क्या होगा इसमें? क्या करना होगा? आई एम आस्किंग यू, जस्ट डू रैंडम गैसेस. क्या लग रहा है आपको? What are we gonna do in this model?
Uh,
Discounting factor
uh,
of dividends. हाँ बोलो बोलो.
if shareholder will analyze the dividend in future which he gets in the future and discount it with the present situation and get the same amount with he is getting he is getting he is getting the future amount is discounted at the present value. Or the present value he will compare with the other investment, so he will take the decision.
So we will not compare everything was correct, but we will not compare with other investment. We will just compare with the actual market price. See, this P0 is nothing but the expected. कि कितना price होना चाहिए. Then we will compare with the actual price of the share. कि actual में कितना है. Understood? So this P0 is based on, it is nothing but present value of all future cash flow from that shares. So can I say future cash flows will be in the form of dividends? Yes or no? Future cash flows from the shares obviously will be in the form of dividends, because our model is all about dividend discounting model. So discounting of future dividends and the selling price at the end of the life. Okay? And the redemption value or the selling value at the time when you sell the shares, because that is also cash flow. Now you are selling a shares, you will receive some cash, so that is also cash flow. So as per dividend discount model, price of the share today or the expected price of the share today is nothing but present value of all the future cash flows from that shares. So future cash flows from that shares obviously would be in the form of dividends and in the form of redemption value at the time of sale. Correct? And since we have to calculate present value, we will need some discounting rate. Yes or no? Future value को discount करना है, present value में लाना है, we would need a discounting rate. तो बोलो यहाँ पे discounting rate क्या होगा? Discounting rate for shares obviously would be KE, because we are discounting dividends of equity shares. Are you following? So here the discounting rate would be KE. Understood till here? Understood till here? So can I say my P0 would look something like this: D1 upon 1 plus KE raised to 1. जैसे हम कैपिटल बजटिंग में कैश इनफ्लो ऑफ ईयर 1 को हम डिस्काउंट करते थे, सो यहाँ पे वी विल डिस्काउंट द डिविडेंड एट द एंड ऑफ ईयर 1 विथ KE. Yes or no? Plus D2 1 plus KE raised to 2 dividend at the end of year 2 plus D3 1 plus KE raised to 3 and so on till infinity 1 plus KE infinite till the shares are sold. ठीक है? Are you following? So it is just based on the concept of capital budgeting. You have to just discount the future cash flows. उसमें फ्यूचर कैश फ्लोज वर इन द फॉर्म ऑफ कैश इनफ्लोज. सेल से लेके हम कैश इनफ्लोज तक कैलकुलेट करते थे. Here future cash flows will majorly be in the form of dividends. ठीक है? Are you following, friends? Any doubts still here? Dividend discount model. Now next question is कि ये D1 कितना होगा, D2 क्या होगा, D3 क्या हो सकता है, D1 क्या हो सकता है, D2 क्या हो सकता है, D3 क्या हो सकता है. A random guesswork again. From this we come to sub methods of dividend discount model. We are now guess working on what could be D1, what could be D2, what could be D3. So from this guesswork, we are now deriving sub 3 methods. Number 1, dividend is constant every year. So D1 is same, D2 is same, D3 is same, D4 is same, D5 is same, D6 is same. So this is the first method, constant dividend method. Second, growth in dividend. Means every year you add growth ka percentage to dividends. Let's say D1 is 10%. Sorry, 10 rupees. And growth rate is 10%. So next year it would be rupees 11. Third year it would be 11 plus 10%. 12.21 and so on. So we are incorporating growth in dividends. Are you getting this? So first guesswork is dividends are constant. Means D1, D2, D3, D4, D5, everything is constant. Second, we are incorporating growth in dividend. So this is called growth or Gordon's model. First is called as constant dividend model under dividend discounting technique. Second is called Gordon's model under dividend discounting technique. Third, variable growth model. यहाँ पे है ना, the growth rate was constant 10% in my current illustration. Growth rate was constant. So it is also called as constant growth model. First sub method is called as constant dividend method. Means dividend remains constant every year. Second, dividend will grow, but it will grow at a constant rate. So that's why it is called as constant growth model of dividend discounting technique. Third, variable growth model. Means dividend will not grow at a constant rate now. It will grow at a variable rate. And after certain years, let's say it grows at a rate of 12% for first 2 years. Then it grows at a rate of 15% for next 3 years. Then again at 10% for another 2 years. And then now it is at a constant rate of 8%. So this is called as variable growth model of dividend discounting technique. Growth is happening at different rates. But after a certain point in time, it is growing at a constant rate. So it is called as variable plus constant growth model. क्या नाम है इसका? Variable plus constant. See, can you see for first 7 years, it was at variable rate. And after that, it became constant. Okay? So there are 3 sub methods under dividend discounting model. One is, we will assume when first is assuming dividends are constant every year. Second is assuming growth in dividend but at constant rate. Are you following? Third is assuming growth in dividend but at variable rate initially and then at constant rate thereafter. Well, any doubts? So these are sub methods of dividend discounting model. Any doubts still here? यही possibility है ना, either you assume that dividend is constant every year Either you assume that it is growing but at a constant rate every year, or either you assume that it is growing at the variable rate initially and then it becomes constant thereafter. Because long term we are not able to predict कि क्या growth हो सकता है. So you have to assume a constant rate for long term perspective. Bolo, any queries? Any doubts still here? Clear? So dividend discounting model, the core crux is that price of the share today as per dividend discount model is nothing but present value of all future cash flows. Correct? Future cash flows are generally in the form of dividends. Now we have to do guesswork on dividend. What could be the dividends? So dividend can either be constant, dividend can be at a growth but a constant growth rate, dividend can be at a variable growth rate for initial years and then after at a constant growth rate. Understood? ठीक है. So first, constant dividend approach. Now I will take some illustration so that you get better clarity. First sub part, sub method of dividend discounting technique. ठीक है? Constant dividend approach. So here dividend for all the years will remain constant. So let's say my KE is 12%. Last dividend paid by the company. Last dividend paid by the company. Yes, zero growth. Constant dividend means you are not incorporating any growth. So that is also called as zero growth. You can give any name. Huh? Concept is very simple, that dividend remains constant. Last dividend paid by the company is ₹10. ठीक है? So company ने last year dividend paid, जो dividend दिया था, is ₹10. Since we are following constant dividend approach, can I say every year it would be ₹10 only? So can I say my P0 would be D1, which is 10, divided by 1.12 raised to 1, correct? Plus D2, ₹10, divided by 1.12 raised to 2, plus D3, ₹10, divided by 1.12 raised to 3. And for how many years? Can I say D infinite would be ₹10 divided by 1.12 raised to infinity? Yes or no? This is the logic, that price of the share today is based on future cash flows in the form of dividend discounted at K. तो future तो infinite तक जा रहा है. Are you following? So can I say logically it is impractical to solve in calc till infinite? Logically या infinite तक कैसे calculate करोगे? Concept is clear. It is based on future cash flows. You discount the future cash flows in the form of dividends using K. Concept is very clear. ये सबको discount करना है. But till infinity, how will we solve till infinity in calculator? Logic is that you have to do till infinity. So due to impracticality in solving in calc, you have to devise a formula कि लॉजिक सेम रहे, प्रिंसिपल सेम रहे, बट फॉर्मूला से आंसर आ जाए. यू हैव टू डिवाइज अ मैकेनिज्म. आर यू फॉलोइंग? सो द फॉर्मूला इज, this logic is now getting converted into formula. If you see it carefully, this is based on the concept of sum to infinite series of geometric progression. अगर आप ये ध्यान से देखो ना, तो ये at lower level of maths आई गेस 9th स्टैंडर्ड 10th क्लास के मैथ्स में आता था. दिस इज नथिंग बट सम टू इनफाइनाइट सीरीज ऑफ geometric progression. So based on that concept, taking the formula from that concept, we have devised a formula. Price of the share today is nothing but D upon KE. This is based on the concept of sum to infinite series of geometric progression. If you see this entire series now, this entire series is of sum to infinite series of geometric progression. उसकी फॉर्मूला क्या थी? आई गेस इट वाज समथिंग A1 minus B, something like this. ये फॉर्मूला थी where A is the first term, 1 minus R था, sorry, not B, but it was 1 minus R, and R was second term divided by first term. See, this is not in your FM syllabus. This is the logic of this formula. How the formula is devised, that I am trying to explain you. Even if you are not able to remember this sum to infinite series of geometric progression, that is absolutely fine. Because वो mathematical concept है. We have taken the base from maths and we have devised our formula, which is P0 is equal to D upon KE. Are you following? The logic is this: you have to discount the cash flows in the form of dividend till infinity. But till infinity, practically it is not possible to calculate. So we have to devise a formula. We have to devise a mechanism. So we have devised a formula taking the help of the concept called sum to infinite series of geometric progression. So maths में ये formula थी उसकी A upon 1 minus R, where A was the first term. First term. Can I say first term is nothing but D1 upon 1 plus KE raised to 1. Second term is nothing but D2 upon 1 plus KE raised to 2. And the first term is D1 upon 1 plus KE raised to 1. So if you substitute this A and R in this formula, you will get this answer. P0 is equal to D upon KE. But as of now, ये आप घर पे करना, because it is not relevant for financial management. We are more concerned with this, the end result. We are not concerned with mathematical का logic, with maths का logic. We are concerned with the end result by using the maths का concept. ठीक है? Are you following? Any doubts? Do you want me to prove this? एक बार कर लूं?
Yes, sir.
ठीक है, चलो कर लेता हूं. R is nothing but second term upon first term. D2 upon 1 plus KE raised to 2. D1 upon 1, and first term is nothing but D1 upon 1 plus K raised to 1. Again, now this is only the one and the last time that I would be solving this. Can I say 1 plus K raised to 1, 1 plus K raised to 2, ये अब एक ही बचेगा, एक उड़ जाएगा. This is very simple.
Yes, sir.
Correct? Can I say D1 and D2 is also same in this case? Why? Because dividend is constant. So when I say ये भी उड़ जाएगा. D1 is also 10, D2 is also 10. So both are same. So when I say R का value क्या बचा? 1 upon 1 plus KE raised to 1. The whole upon 1. Yes or no? Correct? Any doubts still here? So R का value इतना बचा. Now, let's substitute the value of R in the formula of sum to infinite series of geometric progression. So A is the first term. First term is D1 upon 1 plus KE raised to 1. the whole upon 1 minus r. R क्या है? 1 upon 1 plus ke raised to 1. Correct? A is the first term. First term is d1 upon 1 plus ke raised to 1. Divide by 1 minus r. R is what? 1 upon 1 plus k raised to 1. If I take this on the upper side, can I say the formula would be d1 upon 1 plus k, ऊपर भी 1 plus k raised to 1, नीचे भी 1 plus k raised to 1. So can I say अब बचा क्या? d1 upon 1 plus ke minus 1. If 1 plus k raised to 1 can be written as 1 plus ke. Yes or no? So in other words, can I say 1 उड़ गया, 1 plus 1 minus 1 उड़ गया? So what is the formula? d1 upon ke, or simple d upon ke. Are you getting this? आप d1 लिखो, d2 लिखो, d3 लिखो, d4 लिखो, all are constant. So as you write, if you write d1, d2, d3, d4, or you just write d, it is one and the same. Yes or no? Because dividend is constant. d1 लिखो, d2 लिखो, d3 लिखो, d100 लिखो, it is same. So you just write d. Are you following? So it is base. So
Yes,
आ गया answer d upon k. But again I am repeating, this is the concept of sum to infinite series of geometric progression. उसके बारे में आपको क्वेश्चन नहीं पूछेंगे एफएम में. So you are, if you are not able to get this part, that's absolutely fine. You have to understand this part. Following? The logic is discounting of future cash flow. The logic of formula is discounting of future cash flows till infinity. But since it is very impractical to discount it till infinity, we have to devise a formula. So we devised a formula by taking the help of mathematical concept, which is called as sum to infinite series of geometric progression. Understood? अब ये formula कैसे बना है? I am not a mathematics का scholar. So you have to ask some mathematician कि ये formula कैसे बना. Understood? So this was first and the last time that I explained you this sum to infinite series. Now I will just write down the formula. Okay? So when constant dividend, again back to our model, constant dividend model. What is the formula? Formula is P0 is equal to D upon K. Simple. Understood? So can I say in the present illustration, my D is 10 and K is 0.12. So 83.33 will be my expected market price. समझा? Any doubts? Any questions? Easy. Constant dividend. With this, we complete the constant dividend approach of dividend discount technique. Now, second, constant growth approach. Means dividend is growing but at a constant rate. Now dividend is not constant. Dividend is growing but at a constant rate. So that's why it is called as constant growth approach or constant growth model. And this model is given by Myron Gordon. This is also called as Gordon's model. Okay? So let's take the same set of variables. Last dividend paid. Last dividend paid by the company. And last dividend paid is denoted by D0. जो घटना घट चुकी है D0. Company had already paid the dividend, is denoted by D0, is 10. Growth rate is, let's say, 15%. Means now dividend will grow every year, but at a constant rate of 15%. And KE, let's take at 12%. So tell me friends, मेरा D1 क्या होगा? Can I say D1 is nothing but D0 plus growth? Means कि मेरा current year का expected dividend would be 10 plus 15%. Yes or no? Last dividend जो था, I will add growth to it. So can I say my D1 would be 10 plus 15%? कितना आ रहा है? Tell me. How much? My D1 would be the expected dividend at the end of year 1 would be 11.5. So now in D2, it would be add growth to D1. Yes or no? So when I say it would be 11.5 plus 15% now. कितना आ रहा है? 13.225. 13.225. My D3 would be add growth to D2 now. 13.225 plus 15%. कितना आ रहा है?
15.2.
15.21. My D4 would be add growth to D3 now. 15.21 plus 15%. कितना आ रहा है? 17.5. So can I say my P0 would look something like this? D1 upon 1 plus K raised to 1 plus D2 upon 1 plus K raised to 2 plus D3 upon 1 plus K raised to 3 plus D4 upon 1 plus K raised to 4 plus D infinite upon 1 plus K raised to infinite. Yes or no? Correct? तो अब हम again the same question comes over here. So first year का it is 11.5 divided by 1.12 raised to 1. Now dividend is not constant, so I cannot write just D. I have to write D1, D2, D3, D4 because all the values are different for all the years. Second is 13.225 divided by 1.12 raised to 2 plus 15.21 divided by 1.12 raised to 3 plus 17.5 divided by 1.12 raised to 4 until infinite. So again, same impracticality situation we are facing. कि सर इनफाइनाइट तक डिस्काउंट कैसे करें? लॉजिक इज करेक्ट दैट यू कीप ऑन डिस्काउंटिंग टिल इनफाइनाइट, बट हाउ इज इट प्रैक्टिकल to calculate on calculator till infinity? So again we have to devise a formula. Yes or no? So again this is also sum to infinite series of geometric progression but with addition of growth. ठीक है? But with addition of growth in R. ठीक है? So again based on the concept of sum to infinite series of geometric progression with growth addition, the formula is nothing but D1 upon KE minus G. Now I will not explain that logic. ये सब मैं राम कथा नहीं करने वाला हूँ अब. But the logic is that only sum to infinite series of geometric progression with changes in R. That is with changes in growth. ठीक है? So this is the formula. And this is Gordon's formula. As far as financial management is concerned, we are just concerned with this formula. हमें ज्योमेट्रिक प्रोग्रेशन इनफाइनाइट सीरीज से कोई लेना देना नहीं है. हाँ, वी हैव टेकन द हेल्प ऑफ दैट कॉन्सेप्ट टू डिवाइस दिस फॉर्मूला, बट वो फॉर्मूला क्या है उससे हमें कोई लेना देना नहीं है. वी आर नॉट कंसर्न विद दैट. ठीक है? सो दिस इज द गॉर्डन्स फॉर मॉडल. एंड आई गेस यू हैव लर्न गॉर्डन्स फॉर्मूला इन कॉस्ट ऑफ कैपिटल ऑल्सो while calculating KE. Can I say the formula of Gordon was D1 upon P0 plus G? This formula, have you seen this somewhere in cost of capital chapter? कुछ ध्यान में आ रहा है? Memory in your conscious? Are you able to recollect this? So when I say if I take this G over here, So this will be Ke minus G is equal to D1 upon P0. Okay? If I take P0 over here, can I say D1? Sorry, it would look something like this. P0 Ke minus G is equal to D1. So therefore P0 is equal to D1 upon Ke minus G. This is the formula. Can you see this? This is the formula. So the real formula of Gordon is this. This is what Gordon has given. But in cost of capital chapter, we transposition the formula for our flexibility. हमने transposition कर दी थी. The actual formula that Gordon has given is this. D1 upon Ke minus G. But in cost of capital chapter, to calculate Ke, we transpositioned the variables and calculated Ke. Are you getting this? Any doubts? So as far as financial management, our academics is concerned, constant growth model, the formula of constant growth model is P0 is equal to D1 upon Ke minus G. Followed? Followed? And how to calculate growth if growth rate is not given in the question? How to calculate? Again, you have learned this in cost of capital chapter. It is nothing but ROI multiplied by retention ratio. This formula also you have learned in cost of capital chapter. I told you this chapter will run parallelly with COC, cost of capital. So if growth rate is not directly given in the question, then you calculate G using ROI into retention ratio. Okay? Followed. And D1 is nothing but expected dividend at the end of year 1. D1 is nothing but the expected dividend in the coming year, not the last dividend, the expected dividend. Well, any doubts? Any queries? In our second model of dividend discounting technique, which is nothing but constant growth model. So let's solve our illustration. Growth rate is 15%, K is 12%, last dividend paid is 10. So can I say, as per Gordon, P0 is nothing but D1 upon Ke minus G. I have Ke. Ke is how much? Sorry, Ke cannot be less than G. It has to be greater than G. Let's take Ke at 20%. So when I say Ke is 0.2, G is 0.15, D1 is nothing but D0 plus G. Correct? So D0 was 10 plus 15%. My D1 comes to 11.5. So substituting the variables in the formula, my P0 is 11.5 divided by 0.2 minus 0.15. कितना आ रहा है? 11.5 divided by 0.05. 230. Okay. So as I told you that every model has own set of assumptions. Even this Gordon model, the Gordon's formula has certain assumptions. Assumption number 1, Ke remains constant. Assumption number 1, this Ke remains constant till infinity. Means my cost of equity till the company is into existence will be same. My G remains constant. That's why the name is constant growth model. The growth rate has to remain constant. अच्छा थर्ड ये मत बोलना कि dividend remain constant. No, dividend will change every year because we are incorporating growth. So dividend will not remain constant. So K remains constant, G remains constant. Life of the company is still perpetual succession. The going concern assumption of accounting that company है जब तक है जान, मीन्स जब तक कंपनी ऑपरेशंस में है, we will assume that it will continue till perpetuity. Fourth, very important, KE has to be greater than G. Very important. This is fourth assumption. If KE is less than G, let's for the time being, let's take K is less than G. Let's take the same example. D1 came to 11.5. G was 15% and now let's take K at 10%. ठीक है? So देखो आंसर क्या होगा as per Gordon. 11.5 divided by K minus G. 0.1 minus 0.15. So when I say 11.5 divided by minus 0.05. So when I say answer would be minus 230. My market price is in negative. This means market price in negative means you are selling the shares and you are paying. Is this logical? Or in other words, you are buying the shares and you are getting money. Negative market price means what? You are buying the shares and you are getting money. So is this practical or logical? So that's why fourth assumption is very important. KE has to be greater than G. Otherwise, answer will be negative as per Gordon's model. And answer means market price in negative means you are selling the shares and you are paying to the buyer instead of getting the money. Understood? Assumption number 5, unless otherwise specified, entire capital is raised from equity shares. That is the standard assumption of this chapter. Bolo, any queries in Gordon's model? Or I would say another name is constant growth model and its assumptions. Bolo, doubt? Any doubt? I'm waiting for your response. Clear, everyone? Sure? Sure. So if now we take some practical problems on Gordon's model or dividend discount model, we will be able to solve. Yes, except the third sub method of dividend discount model. Third sub method क्या था? Variable plus constant growth. Means initially for few years, company's dividend is growing at a variable rate. And after certain years, it is growing at a constant rate. Are you following? So let's understand the third sub-method of dividend discount model, which is called as variable plus constant growth model. Correct? And let me explain you this with the help of illustration itself. तो ये आपको डायरेक्ट समझ में आएगा. So let's see if there is any question or illustration in module. So this is the formula given by Gordon. D0, 1 plus G is nothing but D1. Huh? You are just incorporating growth to D0. D0 is the last dividend. So dividend discount model has 3 subparts. Zero growth means constant dividend. Constant growth, that is Gordon's model. Third is variable growth. Okay, let's first take an illustration of Gordon's model so that it gets clear. XYZ is a company having share capital of 10 lakhs of 10 each, means face value is 10. It distributed current dividend of 20% per annum. It distributed, huh? Please focus on this word, ED. It distributed. Means can I say this is the last dividend that company had given to its shareholders? So can I say D0? D0 is nothing but 10 ka face value and company has given 20%. So rupees 2 is the last dividend that company had declared or paid. Annual growth in dividend is expected 2%. So when I say G is 2%, which is nothing but 0.02, which is directly given in the question. The expected rate of return on its equity capital is 15%. So this 15% is nothing but KE, 0.15. Calculate the price of the share applying Gordon's model. Simple. You have to just simply substitute the value in the Gordon's formula. As per Gordon's model, price of the share today is nothing but D1 upon KE minus G, where D1 is nothing but D0 plus growth. Means you add incorporate growth to the last dividend paid. So 2 plus 2%. How much it is coming? 2 plus 2%. 2.04. So 2.04, my KE is 0.15 minus growth is 0.02. How much is the answer? 15.69 आ रहा है सबका? 15.69. ठीक है? So answer is 15.69. Understood Gordon's model? So now let's move to variable growth model. उसका I am trying to find a practical problem. हाँ ये रहा illustration number. नहीं ये भी Gordon ही है. This is also Gordon. नहीं है. So let me create an illustration for you. For variable plus constant growth model. ठीक है? So again, the last dividend paid. Now I am not writing entire thing. I will just write D0. D0. So now we have to understand that this is the last dividend. कंपनी ने जो लेटेस्ट डिविडेंड जो पे किया हुआ है ना, दैट D0 लेट्स से ₹10. ठीक है? Growth rate G is 15% in the first 2 years. ठीक है? Then G becomes 18%. Then for the next 2 years, my dividend grows at 18%. So now for the next 3 years, it is growing at 12%. So this is how life cycle of any business works. First at normal growth, then it takes a high pace, then again at a maturity stage, and then flat stage. Life cycle. Okay, so 12%, now it is at a declining stage. Next 3 years. And then till infinity, it remains constant from 2, 4, 7th year onwards, means from 8th year onwards. It is at a constant rate at 10%. Okay? So this is an illustration of variable plus constant growth. Calculate P0. So again, just go by the logic. P0 is nothing but discounting of future dividends at KE. KE is, let's say, 20%. Okay? Logic says keep on discounting the future dividends using KE. So tell me, my D1 would be how much? Can I say it would be 10 plus 15% in year one? Year one, my growth is 15%. So can I say in year one, my expected dividend at the end of year one would be 10 plus 15%? Yes or no? It comes to 11.5. Again, in next year, my growth is 15%. So can I say my D2 would be 11.5 plus 15%? करो तो कितना आ रहा है? 13.225 आ रहा था. बोलो, any query still here? So year one, expected dividend at the end of year one is 11.5. Expected dividend at the end of year two is 13.225. Now from third year onwards, for third and fourth year, my dividends are growing at 18%. So can I say my D3 would be 13.225 plus 18%? कितना आ रहा है? 15.69. For fourth year as well, my dividends are growing at 18%. Six nine की 6.1. 6.1. Okay. For fourth year, it is coming to 18.41. Now for the next 3 years, means for year 5, for year 6, for year 7, it is growing at 12%. So 18.41 plus 12%, 20.62. Then 23.10. $25.87. Okay, and from 8th year, it is constant. From 8th year, it is constant till infinity. Yeah? So tell me, now my question to you. In this illustration, can I apply constant dividend model ki formula D upon K? Can I apply that? Tell me.
Yes, yes, sir.
Why? वो formula में क्या था? Dividend has to be constant, but is any of the dividend constant over here? Is any of the dividend same over the year? No, so we cannot apply the first formula D upon K. That is rejected.
So for from eighth year onwards, and then we add the D1 to D7.
हाँ, तो 8th ईयर में क्या करेंगे? 8th ईयर में क्या करेंगे? 8th ईयर में dividend is not constant. Growth rate is constant. So from 8th year, my dividends will grow at 10%. So for D8, it would be 25.87 plus 10%. Let's say it comes to 28. Then for D9, it would be 28 plus 10%. It comes to 30.8. So D is not constant. For if you want to use the first formula, constant dividend has to be constant. So first formula is outrightly rejected. Are you following? Because dividends are not constant. Now we come to
Yes, sir.
Gordon's formula, second model. Can we use Gordon's formula in this scenario? My question to you. Can we use Gordon's formula? Gordon's formula का एक assumption था, याद रखना, that growth rate has to be constant. Anywhere is growth rate constant? Growth rate is not constant over the year. It is growing at variable rate. So can we apply Gordon's formula over here? My question to you. Hey, are you able to Get what I'm trying to say? Gordon, see, someone told Gordon method, sir. Milan Ali said that, sir, use Gordon method. But Gordon says that growth rate has to be constant throughout the years. But can you see this scenario? For first 2 years, it is 15%, then it grows at 18%, then it grows at 12%. Is it constant? So can we outrightly apply Gordon's formula? Tell me.
No, sir.
We cannot apply. But from 8th year, can we apply Gordon's formula from 8th year till infinity?
Yes, sir.
Yes, because from 8th year, growth is constant. So all the assumptions of Gordon's formula are holding true from 8th year. Correct? So from 8th year, we can apply Gordon's formula. But for first 7 years, we will just normally discount. Are you getting this? We will just normally discount using KE. These are my future cash flows for first 7 years. So using KE, my discounting rate, I will normally discount by that logic. But from 8th year, I can apply Gordon's formula because all the assumptions of Gordon, that is K remains constant, growth remains constant, K is greater than G, all the assumptions hold true from 8th year till infinity. तो तब से apply करो. So see, Gordon's formula was P0 is nothing but D1 upon KE minus G. Correct? Yes or no? Correct? यही formula थी. So from 8th year, my growth is remaining constant. So what would be my P8? P8 would be D9 upon KE minus G. Because from 8th year, I can apply Gordon's formula. So I will not get P0, I will get P8. Are you following? From 8th year, I am able to use Gordon's formula. So you will not get P0, you will get P8. P8. So just like this, P0 is equal to D1 upon KE minus G. P8 will be D9 upon KE minus G. Simple. Combine both. No, not both formulas. We will use the common logic of discounting and Gordon's formula. Okay? So let's calculate P8. Let's calculate P8. P8 is nothing but D9 upon KE minus G. तो उसके लिए हमें D9 calculate करना पड़ेगा. So let's first calculate D8 as well. D8 and D9. D8 would be 25.87 plus 10%. कितना आ रहा है? बताओ मुझे. D8 कितना आ रहा है? 25.87 plus 10%. 28.46. And my D9 would be D8 plus 10%. So 28.46 plus 10%. कितना आ रहा है? 31.3. 31.3. So can I say my P8 would be 31.3 divided by KE, which is 0.2, and now my growth rate is 0.1, which is constant. So कितना आ रहा है? My P8 comes to 313. 313. ठीक है? So now see the pattern of cash flows. Pattern of cash flows कैसा बन गया? ध्यान से D1, D2, D3, D4, D5, D6, D7, D8 and P8. See, I want the price today. I want P0. So can I say I have to discount this P8 as well? Are you following? I have to discount this price as well so that I get P0. So now these are my stream of future cash flows. D1 plus D2 plus D3 plus D4 plus D5 plus D6 plus D7 plus P8. And now you discount using the discounting rate. Followed everyone? This is how you calculate price of the share today when variable plus constant growth is there. ठीक है, so let's solve. ऐसे horizontally अच्छा नहीं लगेगा, let's prepare vertically. So this is my year 1, 2, 3, 4, 5, 6, 7 and 8. ठीक है, my stream of cash flows in year 1, it is 11.5 in the form of dividend, 13.225 in the form of dividend, 15.61 in year 3, 18.41, 20.62, 18.41, 20.62, 23.1, 25.87, and last but not the least, in the year 8 there would be dividend plus price both. So D8 is 28.49 plus P8, which is 313. Are you following? So these are your stream of cash flows now. Last में dividend plus price. Are you getting this? And discounting rate is at 20%. So you will calculate the discounting factors for each year. And by now, you should know how to calculate discounting factors and then present value of future cash flows, which is nothing but P0 in our case. Now it is not PVCI, it is P0. कितना आ रहा है? हाँ, तो from 15th year you have to start. But exam में see, institute is also very practical. They will not start the constant rate from year 15. They know that it will take a lot of time in that calculation. So maximum till 6 to 7 years, they will stop, and after that, they will give a constant rate. Because they also know that if constant rate is from year 15, it will take a lot of time in calculation. So maximum up to 7-8 years, and from there onwards, rate would be constant. But logic is this. You just focus on logic. ठीक है, P0 कितना आया? So if we are not able to use the formula, we discount. We go by the logic. And we use the formula from the point in time where we can use. Yes, you have to show calculation of variable rate. 139.34 है सबका ये आ रहा है. I am not calculating. I am believing your calculations. Everyone is getting this answer? 139.34. Okay. 138. Okay, so some round of difference would be coming. But आसपास आना चाहिए. So understood? Variable plus constant growth. So conclusion of this technique, conclusion of this model. Apply Gordon's formula from the year where the growth rate is getting constant. Understood? And before that, you just do normal discounting using discounting rate. Followed? So with this, we complete dividend discount model, and under dividend discount model, sub 3 methods. One is constant dividend. The formula is D upon K. Second is dividend is growing but at a constant rate, which is also called as Gordon's model. The formula is P0 is equal to D1 upon K minus G. And this formula is devised from the concept of mathematics called sum to infinite series of geometric progression. Third model under dividend discount technique was variable plus constant growth. This model says that apply the Gordon's formula from the year where the growth rate is getting constant. But before that, go with logic. Go with normal discounting logic. Followed? Bolo, any doubts? Under dividend discounting model? Simple है chapter. Maybe not in illustration, but they would have given under practical problems. But your concept is clear after my explanation. Tell me that.
Yes, sir, clear.
हाँ तो practical problems भी होगा, maybe not under illustration. So with this we complete dividend discount model and Gordon's model as well. ठीक है? Any doubts still here? Now let's solve some practical problems on what we have learned in today's session. Let's solve some more practical problems. See, as I told you, this chapter is all about formulas. If you're able to recollect the formulas, this chapter is very easy for you. Uh, 139.34 is not P8. You gave me the final answer, na? P0. इसको भी discount किया ना? At 20% for 8th year. So 139.34 is the price today, including this discount, including this 313, means after discounting 313. This is the final answer. जैसे capital budgeting में we used to calculate PVCI. So this is that PVCI in this chapter. So again, as per Gordon, Gordon says that any changes in dividend decision will definitely affect the market price. Okay? So Gordon has also the same conclusion just like Walter. If ROI is greater than KE, then it is beneficial or it is in the best interest of the investor to keep funds with the company in the form of reserves and surplus. And if ROI is less than KE, then it is in the best interest of the investors to distribute dividend. Okay? So both Walter and Gordon are both on the same side. They both have same thinking that dividend decision does affect market price. And if ROI is greater than KE, keep funds with company because company has more earning capacity. ROI is less than KE, distribute to shareholders because they are able to earn more from somewhere else. Okay? So they both run on the same lines. First is MM. Okay, second question. Let's solve illustration 3 first and then let's solve illustration 2. First, let's take illustration practical problem 3 and then let's go back to practical problem 2. With the help of following figures, calculate the market price of a share of a company by using Walter's formula and dividends growth model Gordon's formula. ठीक है? So we have to calculate market price. First, by Walter's formula, Walter's model. Tell me, what is the formula as per Walter? P0 is equal to, बोलो, क्या है formula? Are you all able to recollect? D upon KE plus E minus D, ROI upon KE, the whole upon KE. So once you have written down the formula, your next step is to try and find out all the individual variables. Check for all the individual variables, whether they are given in the question or not. So the question says that E is 10, D is 6. So E is 10, E मिल गया, D is 6. ठीक है? D, just D. K is 25. K is equal to 0.25. ROI is 20. Sorry, K is 20, not 25. ROI is 25. K is 20. ROI is 25. Internal rate of return on investment, 0.25. So all the variables are given for Walter's model's formula. So we can easily calculate P0 by substituting this variable 6 upon 0.2 plus 10 minus 6.25 upon 0.2, the whole upon 0.2. So my P0 comes to 55. Okay. Now my additional question to you. Is this the optimal payout ratio as per Walter? Is this the optimal payout ratio as per Walter? Batao. What is your opinion? P0 is 55. When dividend is rupees 6. So can I say dividend payout ratio is 60%? Earnings is 10. Dividend is 6. My payout ratio is 60%. Tell me, is this the optimal payout ratio? The best payout ratio? No, no, no. Why? So what is the optimal payout ratio? My question to you. क्या होगा optimal payout ratio? Zero. नहीं नहीं, in this scenario, not specifically I want in this scenario. Either 0 या 100 नहीं, ऐसा नहीं. Give me one answer. 0 की 100. Under the present scenario, in this illustration, give me whether the optimal payout ratio should be 0% or it should be 100%. बोलो 0 और 100 में से कौन सा? 0. Yes, 0. Why? Because ROI is greater than KE. ROI is greater than KE. 25 is greater than 20. So my company has more earning capacity than investors' earning capacity. So it is better to retain everything and distribute nothing. Okay? So optimal payout ratio, if asked, is 0% in this scenario, but they have not asked. So our calculations end over here for Walter. Now B part is Gordon. So as per Gordon, P0 is equal to D1 upon KE minus D. So you have to add growth to dividend. So can I say D1 is nothing but D plus G. D is 6. Now growth. Is growth rate given in the question? Is growth rate given in the question? Correct. Everyone is correct. Growth rate is 10%. कहाँ दिया है? कहाँ दिया है? Directly. They have not given the growth rate directly, but we know the formula to calculate growth. Growth is nothing but ROI into retention ratio. This formula you have already learned in cost of capital chapter. ROI is 25%. and my retention ratio is 40%. 0.4. कितना आया? My growth comes to how much? 10%. Yes, correct. 10%. So 6 plus 10%. So it comes to, my D1 comes to 6 plus 10%. 6 point. बोलो मेरा D1 कितना आया? 6.6. Correct. So P0 is equal to 6.6 divided by KE is 0.2, growth is 0.1. करो 6.6 divided by 0.1. 66. ठीक है? So this was Gordon's formula. So let's quickly solve one more illustration, illustration 2. And then Vivek Banerjee sir will conclude for today's session. ठीक है? तब तक हो जाएगा. The following information is supplied to you. Total earnings of the company is 2 lakh. Number of equity shares is 20,000. Dividend paid by the company is 1,50,000. So tell me, dividend per share कितना है? Dividend paid 1,50,000 is total, but dividend per share is how much? Can I say it is nothing but 1,50,000 divided by 20,000? Price earnings ratio is 12.5. Price earnings ratio is 12.5. Ascertain whether the company is following an optimal dividend policy as per Walter. देखो यहाँ पे लिखा है. You have to apply Walter's model. So after applying Walter's model, tell me, is the company following an optimal dividend policy? So Walter has simply said, if ROI is greater than KE, dividend payout ratio should be 0%. If ROI is less than KE, dividend payout ratio should be 100%. Yes or no? So let's first calculate what is ROI and KE in the given question. Directly it is not given. Bolo, tell me, what is the KE in the question? Kitna hai KE? I may please end. Okay, I just end the session right now itself. Okay, so we will continue this illustration in the next class, as I think sir would need some more time in concluding. So let's just stop this session over here and Vivek sir will take this session from here. Yes, Vivek sir. Please continue. Vivek sir, are you there? Yeah, so in book it is 60, not 66. I knew everyone would start seeing the solution. Okay, so in that case, they have assumed that D, ये जो आया था ना D, 6 rupees is itself the D1. Means they have not added the growth rate. उन्होंने क्या assume किया है कि ये जो D जो 6 है, that itself is D1. And I have assumed over here that D is the last dividend paid by the company. Okay? So both is okay. You just write down the note that D, which is 6 in the previous question, is assumed to be the last dividend paid without incorporating growth. And even if you assume this D as D1, then that is also fine. Because they have not clearly mentioned the statement as that this is the last dividend paid by the company. ऐसा statement कहीं पे mention नहीं किया है. So you are free to use any of the assumption. But when they specifically mention that statement that the dividend is the last dividend paid, then you have to incorporate growth definitely. तभी तो आपको incorporate करना ही है. But ऐसा statement जब mention नहीं होता है ना, then you are free to use any assumptions. But you just mention the note in it. Oh, okay, you will not be able to conclude. Okay, no worries. So let's continue with this, our illustration. Let's complete this. So illustration number 2, the optimal payout policy as per Walter is either 0 or 100%. So for that, we need ROI and KE. Nothing is specifically or directly given in the question. So we will take help. We will solve indirectly. Can I say KE is inverse of P ratio? 1 upon P. ये भी आपने पढ़ा होगा कॉस्ट ऑफ कैपिटल में. To calculate KE or KE is inversely related to PE. This you have already learned in cost of capital chapter. So can I say my KE in this case would be 1 divided by 12.5? Yes or no? कितना आ रहा है? My KE comes to 0.08, means 8 आया, 8%. Yes or no? So first task is done. I have calculated KE. Now ROI. Is ROI directly given in the question? ROI भी मुझे कहीं पे भी क्वेश्चन में डायरेक्टली नहीं दिख रहा है. आई एम नॉट एबल टू सी डायरेक्टली, बट यस इनडायरेक्टली मुझे दिख रहा है. रिटर्न ऑन इन्वेस्टमेंट. व्हाट इज रिटर्न ऑन इन्वेस्टमेंट? कैन आई से इट इज नथिंग बट अर्निंग्स अपॉन टोटल कैपिटल into 100. I have invested capital of rupees 1 lakh, for example. And from that investment, I have earned earnings of 20,000. So can I say my ROI becomes 20%? Simple. So in this case, my earnings are 2 lakh rupees. Correct? My earnings are 2 lakh rupees. On the investment of capital of rupees 20 lakh. Sir, 20 lakh कहां से लेके आए आप? मन का बना रहे हो? ये सिंपल ना. 20,000 is my shares and one share is of 100 each. So can I say my total capital invested would be 20 lakhs? And on this investment of 20 lakhs, I have earned 2 lakh rupees of earnings. So can I say my ROI comes to 10%? Correct? So now I have found ROI, I have found KE. In the present scenario, ROI is greater than KE. So optimum payout policy or optimum payout ratio as per Walter would be how much? Is 0%. Understood? So this is my optimal dividend payout policy as per Walter when ROI is greater than KE. Can compute. So first part is done. Analyze whether the company is following an optimal payout ratio. So no, company is not following optimal payout ratio because company dividend should be 0, but instead dividend per share is rupees 7.5. ठीक है. कंपनी ने डिविडेंड कितना दिया? डिविडेंड पर शेयर. कैन आई से टोटल डिविडेंड पेड इज 150 on number of shares of 20,000. So 7.5. Yes or no? And my EPS, earnings per share is rupees. My earnings per share is rupees 2 lakh divided by 20,000. Yes or no? 10. So company's current payout ratio is 75% and the optimum is 0%. Are you following? Company's current payout ratio is 75%, whereas the optimum is 0%. So company is not following optimal dividend payout policy as per Walton. Compute P ratio at which dividend policy will have no effect on the value of the share. A dividend policy having no effect on value of the share, having no effect on P0. ये कब होगा? When can I say ROI is great equal to KE? तभी ऐसा होगा. When ROI is greater than KE, तभी my dividend policy, whatever, if I give dividend or I don't give dividend, it will have no effect on my P0. Yes or no? Are you getting this? So my ROI is 10%. So can I say my KE has to be 10%? So when my KE is at 10%, which is nothing but equal to ROI, my dividend policy will have no effect on price. Correct? So at this KE, they have asked you to calculate P ratio. So can I say P ratio? Again, it is inverse to KE, 1 upon 0.1. Yes or no? P ratio is inverse to KE or KE is inverse to P. That is one and the same thing. So can I say my P at this situation would be 1 upon 0.1. कितना आएगा? 10%. Sorry, 10. 10 times. P is not in percent. It is a multiple. So it is in times. Understood? Last but not the least, will your decision change if P ratio is 8 instead of 12.5? ये जो 12.5 था ना, now they are saying, okay, let's assume that now P is 8. Will your decision change now? So let's see. So my ROI, scenario number 3, my ROI is fixed at 10%. Now my KE will change. Why? Because my P is getting changed. पहले 12.5 था. Now my P is at 8. So can I say my KE will change? So 1 divided by 0.08. How much is my KE coming now? 12.5%. So can I say ROI is now less than KE? 10% is less than 12.5%. So now my decision will obviously change. Now it is in the best interest of the investor to distribute everything as dividend. Means optimum dividend policy is 100%. Followed? So since ROI is less than KE, decision will change and optimal payout policy should be 100%. Yes or no? Followed everyone? Any queries? Yes, perfect. So in today's session, we have learned Walter's model of dividend decision. We have learned dividend discounting technique. Under dividend discounting technique, we have 3 sub methods, sub techniques. One is constant dividend model. One is constant growth model, which is nothing but method given by Myron Gordon. Third is variable plus constant model. Apart from this, we have also understood the assumptions of each model. So in the next session, we would be covering model. We would be covering Graham and Dodd. We would be covering Lintner's model and residual approach. And there is a small theory section in this chapter as well, like in the what are the different forms of dividend, which is a 5 minutes ka topic. So we will learn that as well. What can be the different forms of dividend that company can give? So that a small theory section we will learn in our next session. So I hope this session had added value in your academical life, in your financial management ka life. So have a happy weekend. All the best. Thank you. एंड क्यों नहीं हो रहा है? Yes, sir. Thank you.